Hey, good afternoon, and welcome to Midday Market Update on this beautiful spring afternoon. What is today? It is March 30th,
March
2021.
30th.
Yeah, Kaylee, how you doing today?
You know, I would be better if my allergies were not acting up so horribly, so bear
Yeah.
with me if I sneeze. I'm sorry, guys. It's that time of year.
Yeah, no, I've been having the same problem. In fact, yesterday I'm trying to learn how to do like, you know, not two things at once because that's way beyond my capabilities, Kaylee. It's just, thinking ahead a little bit and even like just a couple seconds into the future. I'm trying to work this mute. And apparently when you hit this mute, it can hear you when you press your mute button like that. And so I've been
Oh,
having, yeah. So I did that to Dooner twice in the last couple of days because of my allergy, right? So because people don't want to hear that, right? So
nah, it happens.
yeah, so I'll mute myself and then forget to unmute myself, and then people can't hear things that they may want to hear. So, but anyways,
Well,
hey,
hopefully that doesn't
you got
happen today on this show.
right. You got your first COVID shot too, as
I
I understand
did.
yesterday, which is tremendous, and a lot of people are getting those, and we're talking about the economy changing and things
Mhm.
opening up, and hopefully they stay open and people don't get crazy off the bat, and we go back into some type of, the variants or whatever they're talking about that could be coming out. I don't know, um, but yeah, that's exciting stuff. That's
I
exciting
did.
stuff. But
I'm
today,
I'm halfway vaccinated, and you know what? I'm ready to get out and do some shopping, do some traveling, and contribute to our economy and basically get back to normal. It's summer's around the corner, and it feels like things are starting to get back to normal again.
yeah.
But anyways, so as you guys know, this is our live interactive show. I've got LinkedIn pulled up, so if you guys are on LinkedIn, drop us a comment. We've got a lot of good stuff for you guys today, actually. Some good news from the Suez finally after a week of, I wouldn't necessarily call it terrible news, but I wouldn't call it good news until today.
Concerning, very concerning news.
Concerning.
Let's call it concerning news. Absolutely. Yeah. Hey, live interactive. Get on there, get your comments, get your questions. We'll talk about them. We'll talk about the Suez Canal. We'll talk about what we're talking with a bunch of people. Who we got today? We've got Spencer Barkoff,
Oh,
president
man.
and co-founder at Rely Payments or Relay Payments, right? Isn't it Relay Payments?
Relay payments.
At Relay
And then we've
Payments.
got
And
Kyle Lintner, principal managing director at K Ratio. He's on a lot. He was on about a week ago with Sonar, with the other Kyle and with Luke.
yeah, no, Kyle Lintner is he's great at guys at K Ratio and K&L up there in Chicagoland. Big supporters of FreightWaves. We've been partners with those guys going to different events, that type of stuff. Kyle's very insightful in the markets and how to mitigate
Yep.
risk and that type of stuff. Very insightful on what's going on. And then we've got John Gallagher, our Washington correspondent. Lots of stuff going on in Washington as well, as far as different infrastructure bills and that type of stuff that is very important to the logistics and trucking. So we'll get to talk with him as well.
But yeah, we'll talk about all of that. But first up, we got news. We got Andrew Cox here with us today. We've got some headlines. Andrew, tell us the good news about the Suez Canal.
Yeah, team, the Ever Given is finally unstuck after you said a week of being lodged into the side of the Suez Canal. And although it is unstuck, the problems for the container lines and the shippers have just begun. In the US, the East Coast ports will feel the brunt of the fallout, although the impact will be felt nationwide. Most of the boxes that transit the Suez Canal are heading from Asia to Europe or vice versa, but the waterway also handles a significant amount of volumes from Southeast Asia and India to the East Coast. In fact, data from the Panama Canal Authority indicates that 1 in 3 containers from Asia transits the Suez Canal en route to the East Coast. So in the near term, the Ever Given pileup will cause a drop in East Coast imports, but that initial lull will be followed by a surge at the ports as the delayed ships arrive. Simon Sunbull, the founder of maritime intelligence company EC.com, he foresees major disruptions ahead. He said carriers have just lost 2 weeks of capacity, and he expects to see carriers skipping ports and canceling sailings to get back on track. Sunbull said if there is a silver lining, it's that the fallout of the Suez blockage shouldn't directly affect the already beleaguered Port of LA and Long Beach complex, given the importance of the Suez to the East Coast. He also said that a key risk to ports in the coming months is vessel bunching. That's when ships go off schedule and arrive too close together, which artificially fills up anchorages. He says that this will occur at box ports as the canal queue unwinds, first at European ports, then at East Coast ports. In Europe, it's much easier for carriers to unload multiple ports cargo on one port and then transit them by interwaterways. He expects to see a lot of that in the coming weeks. And how carriers manage the Asia to Europe port fallout is very important to U.S. shippers, given how limited the world's box equipment is currently. So, for U.S. importers, the Trans Pacific container availability has recently improved compared to the extreme shortages we saw at the end of last year, beginning of this year. But this new network disruptions could erase all the progress we've made. Future Trans Pacific equipment availability will hinge in part on how carriers handle this backlog of the Europe based cargo. Mike?
Wow, that's yeah. I mean, I think we all knew that this was going to be a delayed effect, especially in the United States. I wasn't really thinking much of it being a huge effect on the West Coast, even potentially down with the containers happening and that type of stuff. But you can certainly see how this is going to be a major problem to contend with on the East Coast that had some issues through COVID-19, like the West Coast did, but not nearly to the same degree. This could be not as long lived, though, right? Yeah, you wouldn't think that this would last that long. Maybe a few weeks, I would think, as far as having an impact on the till they get it kind of sorted out.
Yeah, experts are anticipating that this port congestion, or this pileup rather, the delays that are being created by the Suez Canal shouldn't be long lasting. They should be worked through. But that being said, if the vessel bunching occurs to a high level and the ports become artificially and temporarily blocked, that could make this last even longer. The big point of emphasis here is that things were getting a little bit better. We were seeing container availability come up. We were seeing spot rates actually stop rising, and in some cases actually pull back on some trade lanes. But all of that progress seems to be put to the wayside because of this blockage now, creating even more disruptions and capacity problems into the summer and probably into the second half of the year.
Yeah, it's a rough situation, and it's in LTL when you have these kind of nothing interruption like this, but you have shippers that are closed or whatnot. You can reroute. It's a lot more difficult on a ship. Those things are loaded by ports of call, right? In many cases, so you can't just say, well, we'll go backwards and have it speed things up all that great, because now you're talking about rolled cargo and possibility and that type of stuff. So very difficult stuff. Very difficult
Mhm.
stuff. Let's talk about Chipotle and
Chipotle.
and autonomous vehicles, man. What's going on there? This is kind of interesting when I saw this.
Yeah, it's very interesting. This is an article that Brian Strait wrote for our Modern Shipper brand. This is America's favorite burrito bar. Chipotle has announced a partnership and a funding round in self-driving delivery vehicle company Nuro. The investment was made back in November in Nuro's Series C round, but was just announced by the company this week. So that November round, where Nuro raised $500 million, that was their Series C. That brings the total funding of the company to above $1 billion. This company was just founded in 2016. Nuro is one of the leaders in autonomous delivery vehicles. Its second gen vehicle, R2, is currently making paid deliveries in Houston and is also testing in California. We don't know how much Chipotle invested in Nuro. You think about these types of investments tend to be smaller investments placed on a lot of promising startups, but this is Chipotle's first investment in a third party. So Chipotle has seen its online business absolutely explode in the past 12 months. Its digital sales were up 175% year over year at the end of 2020, and about half of that new growth came from delivery. So Chipotle has gone all in on delivery and on digital channels in recent years. I don't know if any of you have tried the new handmade quesadilla, but they've created a whole new meal solely available on its digital channels. That's how they've brought quesadillas back on the menu. They've also opened their first digital only store outside of West Point in New York. So they're future proofing right now. They're wanting to maintain this dominant position as a fast food force. Kaylee?
So I know that you talked about the whole autonomous idea behind Chipotle and that virtual store. And it really just gets me thinking, are they expecting people to continue to capitalize on that working from home, I need my food delivered, and not wanting to leave their house, even like the post pandemic? Or are they just expecting to, I don't know, like keep the people to not? I honestly, truly, like, I'm losing my train of thought, guys. I'm really sorry. I'm,
That's okay.
I'm basically
No,
trying to ask, are they expecting people to continue to want this delivery and this takeout option, even though they're going to be able to go out and eat at regular restaurants again? Like, it feels like their whole business model is take your food and go. And that was great during the pandemic. But now that it's over, if you have the option to go sit at a restaurant, why would people still want that?
Yeah, you're going to.
Chipotle is betting big on digital channels in general. They're trying to open up more dark stores, so to say, stores that don't have a storefront. They're only available for either pickup or delivery, no place to sit inside. That's like the one in New York. We're going to see more of those. They haven't set plans for where they're going to be rolling those locations out, but you can imagine they're going to be in high population density areas, places that have high rents. New York, LA, those are going to be prime examples of where you see these, and they're doubling down. As I said, half of their online sales growth has come from delivery. Of course, some of that is pandemic induced, people not wanting to go in the stores, but some of that is working from home. People are going to be working from home for a long time. I'm going to speak about that when we talk about point of sale. But they're doubling down. They know that delivery costs are a big issue for them. People want delivery. People are using Uber Eats. People are using
Yeah.
DoorDash or whatever third party right now, and they're trying to take more control over that delivery and eventually make some money on those deliveries.
Yeah, those are interesting thoughts, and I'm with you, Kaylee. I've got the same question from a little bit different, and I want to go right into point of sale after this because we're a little bit short on time. We have three guests later on in the show, but real quick, Andrew, when you talk about dark stores, right? Does it not make sense that someone would do something like you know when you drive on like the turnpike or you go to these rest areas like in Florida, et cetera, and there's like a KFC and a McDonald's and so on, all in one, and a Taco Bell on one place. A lot of these things are they're managed by like food service companies, like Aramark will run that whole thing, right? And they'll just run that whole brand. Doesn't it not make sense that in these New Yorks and LAs and these kind of Chicago, downtown Chicago, et cetera, these points where you're talking about where rent is high, et cetera, for efficiencies for someone to have a dark store that is several or a multitude of brands of
Mm.
pickup in one location for density and for and efficiencies? Does that not make sense or no?
Sure, it may make sense in certain situations. I think that's going to be company specific. In Chipotle's, from Chipotle's point of view, they know that they have one of the best sales per square footage marks in the entire fast food industry, and they don't want to water that down by tying themselves to a McDonald's or a Taco Bell or a KFC or any other brand. Really, they are cream of the crop. They know that if they put stores up, they can sell lots of burritos and lots of quesadillas. So I don't think that that's in their playbook. It surely is in others, but not for Chipotle.
Yeah,
To
I
that
just look at it from a delivery standpoint, et cetera. If you're going to go into the point of delivering food to people, Chipotle's going to lose their shirt if they're delivering only their stuff and they're spending that money. Mark my words. That's why nobody has their own delivery stuff except for Amazon, who sells everybody else's stuff. Amazon doesn't just deliver their own goods. That's why they can get away with it.
Well,
to
pizza
that to
companies,
that
pizza
point,
companies
Mike.
own the delivery for their food as
Yeah,
well. There's
that's true.
definitely companies that
That's
own
true.
delivery. I think Chipotle believes that their food is transferable through delivery the same way pizza is.
I got you. I got you. That makes sense. That makes sense. That
I
makes
was going to
sense.
All right.
say, to your point, Chipotle also kind of bills himself as like a boutique fast food. Like it truly is fast food. You're in and out in 5 seconds. But I feel like if you combine those with multiple brands, it tends to like cheapen the idea of the brand. Like you're getting a strip mall fast food instead of like the boutique fast food that Chipotle kind of bills itself as.
Yeah,
Ah.
they've built themselves around experience. That's why they put so much money into their digital app and the connection between their physical and online presence. They care a lot about their brand. They spend billions every year to
Mhm.
upkeep that brand.
Interesting. Interesting. So, hey, point of sale came out yesterday. See how I learned that real fast?
That's right. In yesterday's point of sale, I wrote about the stimulus. The stimulus is having an immediate and substantial impact on the consumer economy, according to Bank of America's weekly consumer spending report. So the 1 year change is distorted because of last year's sharp spending contraction at this time. But the 2 year comps are what we're looking at right now. And buckle up because it's quite impressive. Total card spending for the country in aggregate was up 23% for the latest week of data ending March 20th over 2019. So in aggregate, up 23% over 2019. But for households that receive the stimulus, total card spending was up a staggering 49% over 2019 versus about 10% up for non-stimulus recipients. And here's another remarkable stat. Total card spending for stimulus recipients is running up 40% in March over where it was in February versus, again, about 10% for all others.
Wow. What is left to buy? Like what have people not bought already during the pandemic that they're spending a third stimulus on?
Well, I didn't think there was much furniture or online electronics left to buy, but I was obviously wrong because people are still buying big ticket goods items for their homes and now in their workplaces as well. So the biggest segment gains, as I said, if we want to show that chart one last time, the biggest segment gains came in furniture and online electronics, and the smallest change came in groceries and home improvement. Those were two of the biggest COVID winners. And so we have seen some service spending. You can see airlines and restaurants also saw some substantial positive growth from the stimulus, but Americans continue to spend on big ticket good items that improve homes and workplaces. And I see two potential reasons. One is the big ticket services that we typically spend on, which are sporting goods, concerts, even movies. Most of that is widely unavailable still. And the second is just work from home. It's been a wild success for both employers and employees. And employees believe that they'll be working from home in some capacity for a very long time. So they continue to invest in their workspaces. And then two last points that I'll make. I think that the reversion back to services is going to happen very gradually. The first stage is underway. So we've seen grocery spend being pared back at the same time that restaurant spend is growing pretty rapidly. Restaurant spend is now actually up low single digits over 2019 for the country in aggregate. And the second point is that consumer balance sheets are really strong. The savings rate in the US is double where it was for the 10-year previous average, and it's going to surge again when the March data comes in from the stimulus impact. So for supply chain nerds like us, this means one thing and one thing only: more freight, more imports, and more competition for capacity from importers. The FreightWaves Ocean TEU index, I think we have it here, is up 75% over 2019 right now and is forecasted to jump another 15% over the next 7 days. The last point, the Global Port Tracker put out by the National Retail Federation in February, they said they expect to see imports set new monthly records from now into the summer. Team.
Yeah, it's going to be crazy. It's going to be crazy. Thank you for that, Andrew. Where do people pick up the point of sales? It's always interesting. I'd really want to see what the difference was in like clothing after the first and second stimulus check as to what the
Mhm.
difference was after the third. That'd be an interesting statistic to see how those things changed up. But where do people get the POS, my friend?
Well, I brought the wrong chart because I've got that chart for you. I'll share it with you, Mike. But everybody can find, you can subscribe to the point of sale at freightwaves.com/POS. You can also see some archived posts there to whet your appetite for what you would get in the newsletter. You can also see some of the episodes of Point of Sale Show there at the same place. It comes out 1:30 on Wednesdays. Look out for a big episode with Simeon Siegel, one of the best analysts on Wall Street, coming out tomorrow.
Excellent, Andrew.
Awesome, Andrew.
Thank you so
Thanks.
much.
Thank you.
Awesome. Checking in on LinkedIn super quick. We're running tight on time today, but
Yeah.
got a bunch of good people in our comments. And of course, Rhonda Bumpenza Zimmerman's in there. She's talking about those healthy options that need to be at those rest stops. So maybe taking her 2 cents into putting one of those Chipotle locations on the side of the highway, like you were mentioning about, Mike.
Yeah, absolutely. Absolutely. And I couldn't agree with her more. Yeah, we definitely need those. Right now, like, we need to check in with Nick Austin because I hear we're going to get more rain here in the southeast, and we
It's,
certainly don't. We don't need that. So
nope.
let's check in with Nick and see what's going on in the weather headlines.
The South does not need any more rain, but there's more coming tonight. There was record rainfall and unfortunately deadly flooding across parts of the South, mainly in the Nashville area last weekend. More rain coming tonight. This won't last as long as the weekend rain, but with the ground already saturated, with flooding still happening along parts of the Tennessee and Mississippi rivers, they don't need any more rain, but it's coming. But it'll be gone Thursday morning. It won't last a terribly long time. The Weather Service still has flash flood watches out across almost all of Middle Tennessee. It is across all of eastern Tennessee and even up into southeastern Kentucky, parts of southwestern Virginia. So these are the areas that are going to be most prone to flooding. This includes the Nashville metro area again, Chattanooga, Knoxville, up towards Hazard and London, Kentucky, into southwestern Virginia. So a lot of these areas could see another 2 to 3 inches of rainfall from tonight through the morning hours on Wednesday. And again, with a lot of creeks and streams that are already swollen, flooding already along some of the major rivers in this area, the major waterways, and with a saturated ground, there could be additional flooding that happens because of this kind of quick burst of rainfall. And that may lead to some new ramp and road closures once again. There were a lot of closures over the weekend. And even though the water's been receding, a lot of these waterways are still above flood stage and will probably remain there until this rain ends Wednesday, and then dry weather comes back, luckily, for several days after that. Now, if you go to our website, FreightWaves.com, there's a little more detail on that record rainfall and the deadly flooding that happened over the weekend. And we'll talk about later in the show snow that's coming back to parts of the Northeast.
Wow, snow in the Northeast. All right, not typically a good spring skiing area, but
April snow, no April Fool's joke.
there you go. There you go. Very good. You know what else isn't any joke?
Our
Outbound tender rejections, man.
That's what I was
Outbound
about to
tender
say.
rejections. They are no joke. Let's check in with Zach and see what those things are doing, because things are getting crazy. Zachary.
Hey guys, so tender rejection rates finally topped out just yesterday, or 2 days ago, I should say, 28.31%. This is just 6 basis points lower than their peak value around Christmas of 28.37%. And another like 15 basis points lower than Thanksgiving of about 28.46%. These are all-time highs that we're talking about in March, late March. So the market's still very active, very volatile space, but it is starting to come back down. We're now sitting right around 28.1%, very tight, not a substantial drop by any means. A lot of the tightness appears to be driven by, the Southeast. The Southeastern freight volume or tender volumes are up roughly 7% this month since the start of the month. That's compared to some of the other regions that are relatively flat compared to where they started the month. And some of them are actually down because we had that winter weather event that really induced a lot of surging freight volumes. Those have since kind of moderated a little bit, not necessarily growing at a rapid pace anymore. Southern California also an area to watch. Those volumes are back on the rise again after having a little bit of a mid-month lull out there on the West Coast. So what do we think about, what's happening moving forward? We have Easter that's obviously right around the corner. That probably had something to do with these increasing tender rejection rates as people do take spring breaks and vacations around Easter as well. We see this every year. It's not a significant, any kind of bump or anything like that we normally see, but it does occur. Volumes will probably drop next week and as we do have Good Friday and stuff coming up. But Atlanta is definitely the market to watch. Tender rejection rates surging out of Atlanta right now, as well as Savannah. So we do think that this is due to a lot of that port influx as people are moving away from the West Coast, and this is driving a lot of those volumes up. We did see record volumes in Savannah over the last couple of months in the ports. So Southeast appears to be the hottest area of the country right now. Will it remain so? That has yet to be seen, but for the moment, anybody going around Savannah and Atlanta definitely need to expect increasing freight prices as well as tightened capacity.
It's going to be interesting to watch how the Suez untanglement, not entanglement anymore, and the influx of freight that's coming from that's going to affect, especially in Port of Savannah.
Yeah, all up and down the East Coast, it's going to hit some things, and it's not going to be very good. Hi, Anthony. Let's
Anthony.
He's always butting in. You know what I'm saying? Yeah, it will be interesting. We'll get to that, and we'll I'm sure we'll cover that as it comes. I'm sure Zach is watching our ocean indexes and our imports, exports, and looking at not only imports but the bookings to see how that's going to affect surface transportation in the ports on the East Coast. So you're right. That is going to be a disruptor. That is a few weeks down the line, right? When that starts hitting. But hey, let's check on the economy with Anthony Smith, our lead economist.
Hi, Michael. Hi, Kaylee. So we have quite a few items to jump into since our last report out on Thursday, and that's going to be consumer spending and personal income. Personal income, which dropped 7% in the month of February. Not going to spend too much time on that and focus more so on consumer spending, which was down 1% throughout the month of February. And not too much of a surprise when we saw that retail sales move downwards during that same time frame in the month of February, down right around 3%. Looking at consumer spending or personal consumption expenditures, we can take out services. So we can look at durable goods and non-durable goods. Durable goods being things that have a shelf life of 3 years or more, and non-durable goods being things that have a shelf life under 3 years. So looking at personal consumption expenditures of durable goods, we can throw up a SONAR chart and show that durable goods and have a direct impact on freight volumes, and that moved down 4.6% throughout the month of February, while personal consumption expenditures for non-durable goods moved right around 2.5% downward. So looking at that, there was some downward movement, as again expected, with Americans also being in between stimulus checks. we can anticipate some upward movement for those durable goods and non-durable goods going into the month of April and throughout month of March, now that consumers are or have received those stimulus payment checks. A lot of people are feeling a lot more optimistic. And speaking of optimism, kind of touch on that consumer confidence index, which moved up to 109.7 from 90.4. Might sound like an arbitrary number, but this is the sharpest 1 month increase in just around 18 years. So consumers are feeling a lot more optimistic. Now, that could be from some of these COVID or vaccine efforts. It could be from the most recent stimulus check. It could be that people are feeling a lot more optimistic about their job opportunities, or it could be a combination of all these things. And so that shows that consumers are feeling a lot more confident moving forward here in the near term. Also, we saw that there was a new moratorium extension for renters that are at risk of being evicted. So eviction protection put in place by the CDC, that's been extended through the month of June. I know a lot of updates, but that's going to be one to watch. What's going to happen in June? Is there going to be some kind of payment program, or is there going to be any kind of relief efforts put for those renters? Because as it stands now, they're going to be responsible for any missed rent payments all at once. And so that's going to be something to watch here closely moving forward, because that can be really impactful if there's not any type of solution built around that. Other updates, there was some updates for inflation. Core inflation showed that there was no change, which I am so suspect about, but I'm not going to jump into that. I'm going to save that for another time. There are some significant upward movements in the economy, and we can anticipate some optimism for the consumer, really kind of having some downstream effects. And that's going to do it for this Tuesday update. Thanks so much, Kaylee. Michael, back to you too.
He makes me, when he says I'm suspect and he wipes his brow, you know there's some serious doubt going on in that mind.
There was a lot to digest there, and I don't even think that we've got the time to break it all down.
No, we don't. We don't. There's some spending going on. Durable goods is up, which is really good. There's still some headwinds. He doesn't believe some of the numbers, but the most interesting one, and I just say that from impactful one from a spending and a humanitarian type of thing, I think, Kaylee, is really when you look into that, when he's talking about all those renters that got relief through the
Yeah.
stimulus packages, that they're going to have to pay all that stuff that they got relief from back. That's difficult. I wonder if they can work that through with the taxes. You know, when people do things with their credit cards, or somebody forgives you of your
Mhm.
credit card debt, let's say you do that, that's considered income, and you have to pay taxes on that, right?
Right.
So I wonder if they can work something out like that where it's less impactful, and do it through a tax type of thing. I don't know. They're gonna have to
I
do
don't
something,
know.
because you can't. We really can't afford to have people just tossed out on the street because they owe, 10, 15 grand in
Back rent, right.
back rent. That doesn't seem right to me.
That's
But
not right.
hey, like you said before, we are behind schedule and we got great guests that we need to hit. We're just going to be able to get them all in and close the show on time, hopefully. Let's get off to, we got Spencer Barkoff, president and co-founder at Relay Payments. Spencer, thank you so much for your patience and coming on the show. Lots of stuff going on in the marketplace and around the world, as you know. How are you, my friend?
I'm doing well. Thanks for having us on today.
Yeah,
We appreciate
absolutely.
it.
Absolutely.
So,
How are you guys?
I'm doing great. Kaylee's battling some allergies,
A little
and
rough over here, but we're making it through. It's fine.
but we're doing good. But we're doing good. Hey, Spencer, little bit background. What's Relay Payments? What's going on? What do you guys do? Give the people some context here. What we're talking about.
Sure. So, Relay Payments is an electronic payment solution for the logistics industry. We really help replace carriers and brokers' reliance on cash and checks. Think of us as Venmo or PayPal for the industry. Really, the vision here is to take consumer-like experiences that you and I experience every day when we go to the grocery store and can tap our phone or pay our friends electronically, and bring it into the transportation industry. We work with thousands of carriers, from the largest freight brokers and LTL and FTL carriers to mid-sized carriers, all the way down to owner-operators. And these folks work with us because we're just really streamlining payments across the industry.
So you guys have $43 million in fundraising that y'all just finished. Tell us a little bit about where you're going from that and how that fundraising is kind of a jumping off point for the next step for you guys.
Yeah, so right now it's been crazy. We've just been hiring across the entire company, every single department growing in order for us to serve our customers, which is what we do best, launch new products and continue to innovate with them as we continue to transform the industry.
Spencer, when I first see something like this, forgive me, but when I see this relay payments and we're talking about trucking, I think about a factoring company and I think about truckload and all that kind of stuff. But you guys are doing some big things with Old Dominion, correct? Can you speak to
Yeah.
that a little bit? Now, Old Dominion's LTL line. I don't normally associate the two together. Tell us about what's going on there with Old Dominion.
Yeah, so we were introduced to Old Dominion probably about 8 months ago, and they brought us in to really help them replace a decade-old manual process for how they pay their customers. What was super unique about that relationship where was we were able to work with their operations teams, their accounting teams, their technology teams, really leveraging data integrations to set us up to partner with them for the long term. The results have truly been incredible. We're realizing millions of dollars in savings. Their customers are happy. And we're really realizing our vision and our goal to sit in the middle and to help shippers and brokers and carriers and drivers do what they do best, right? Which is move freight. And we can just help everyone pay each other to streamline the process.
And so, Spencer, tell us a little bit about the tech itself and specifically how it's going to help those drivers. Because, people hear this newfangled thing is coming out. I don't want to have to deal with that. I like the old way. But if this is a solution that's being built to those drivers, what can they expect and how can Relay help them specifically?
Yeah, I think COVID's fundamentally changed the way these folks do business, right? I think when you show up to a location to pay someone, there's a lot of changes that have been made where drivers don't want to interact, and the paper-based products are going away, right? And of course, ELD mandates have changed the way people do business as well. Companies are looking for ways to be more efficient, and that directly impacts hours of service, right? So the fact that we can help these drivers make payments, again, get back on the road and not have to deal with the 45 minutes that it may take to make a payment or the 3 a.m. phone call that they may have to make to get approval. It keeps them on the road. We like to say, checks have been around since the late 1960s in this industry, and we want to be the solution for the next 50 years.
Mm.
So I get it. I get it with the drivers. I want to go back a little bit to the Old Dominion, what you guys are doing with Old Dominion and their customers. Are their customers paying freight invoices and LTL freight invoices using relay payment using you guys? Is that what's going on?
No, so what's happening with Old Dominion is they make certain payments on the road, right? Their drivers have
Oh,
to make
okay.
certain
I
payments,
got
and,
you.
and also they pay for certain fees along the delivery. And
Yeah.
we're helping automate those payments and streamlining their back office to ensure reimbursement uh, and to keep their trucks moving.
Makes
Yeah.
sense.
So
Less
this
paperwork
is
to keep
this
track
is
of.
a simpler, more efficient way to handle, like you'd be handling like lumpers at a food warehouse or something like that. Those type of ancillary things that they're trying to do, fueled, et cetera. Right.
That could be, yes. Those are some of the payments that we help them with, and in addition to others that are made on the road.
Very, very
Excellent.
interesting.
It really is. It really is. And with the $43 million, what's ahead? What's ahead for you guys? What's next up there for relay payments? Where are you guys
Yeah,
going with this?
I mean, a lot of companies build products and then take them to market, right? Our fundamental value is to kind of do the opposite of that, right? We like to work with our customers to understand what their pains are and continue to build what they tell us to build. And so a lot of the funding will go to and continue to invest in our customers, invest in our employees, and continue to build new and innovative solutions for the market to continue to bring this consumer-like payment experience that we experience every day into the transportation and logistics industry.
It's super, super interesting. Making it as easy as just tapping your phone or hitting yes on Venmo, right?
That's the goal. It doesn't make sense to us why it doesn't exist, and we're excited to continue to bring it into the market.
No, it's excellent stuff. I wish I had it back in the day when I was moving, actually in the business of actually moving freight and brokering, et cetera. It's tremendous improvements and speed things up. Spencer, how do people learn more about you guys and reach out to you guys and say, hey, I want this in ours?
Yeah, absolutely. If you're a trucking company and make payments and your drivers make payments on the road, come to relaypayments.com and we'll be in touch to help you automate payments for you.
Excellent stuff. Thank you so much, Spencer. We'll have you on again real soon. Good luck to you guys. I hope things go tremendously for you the rest of 2021.
Awesome. Thanks for having us on today.
Yep.
Thanks,
Have a good
Spencer.
one. There we go.
Hey, you know who always answers the call with just the most abundant and sincere alacrity when you call them up and you ask them, "Hey, you want to come on the show and let's get an update from you and give us some insight on what's going on in the market?" It's Kyle Lintner. I'm not even going to give you
And
a possibility to guess. Kyle Lintner. There he is. There he is. I didn't want anybody to steal your thunder on that one there, unless you were going to jump in and say, "Hey, it's me, Kyle Lintner,
The
principal and
Alacritous
managing
Kyle Lintner.
director." The Alacritous. Is that correct? Is that a word? Alacritous?
Alacritous. That's a good one. If it is,
Right.
it's a good one. It's a good one.
It
Kyle,
is
thanks
now.
for joining us today. You're fresh off an appearance at the 3PL Summit, and man, you're really just on the FreightWaves wavelength. So thanks for being here.
No, thanks for having me. It's always a pleasure talking to you guys and girls.
Hey, so
And
Kyle, what is going on, man? I was watching your update yesterday on LinkedIn. I enjoy those every week, watching those and getting some insight into what is going on. Things are going crazy. Tender volumes are still up, and you're looking at this ratio of freight load volume number, 15%
Yeah,
year over year.
that in itself is crazy. It feels like anything that could possibly go wrong or anything that could happen is happening. And somehow it seems to all be happening on the West Coast. The point that I was trying to make with the last video was we have produce season coming up. We all know that. We have this awful situation in the ports. As of right now, there's 16 vessels in the port of LA anchored. There's another 9 just waiting to get into dock. Uh, what isn't often discussed is the inventory rebuild. Everybody's trying to replenish what was drawn down in this weird post-COVID world that we live in. And inventory to sales ratio right now is at a 9-year low. So we're not even replenishing what's being sold, even though the mission from numerous retailers and providers of goods has been to rebuild inventories in Q1, some say H1. We're not even getting there. And what I was saying to tie that into freight was let's look at some of these warehousing markets like Stockton. We know that's a favorite destination for a lot of this stuff that's going to come into LA. It's going to end up in Stockton in a warehouse. If we're going to rebuild all these inventories, there's going to be a lot of trucks heading to Stockton. It's already a backhaul market. What are we going to do with all those trucks when they show up there? There's not going to be a load for them, which means the rate going into Stockton from LA has to go higher to convince a carrier to take that load. And if we think about moving that rate up higher and we take a look at where rates are already right now, it starts to get a little scary for a shipper or for a broker, which is what I was saying during that 3PL summit. If you're a broker and this is a contract lane that you have, it's going to be a problem if it isn't already in the very near future, and not a problem of how long do we want to eat this loss, a problem of significant lost dollars, negative margin freight, just because we don't have enough trucks, we don't have them in the right places, and then when we do have them in the right places, they're going to a marketplace that doesn't have a load for them to get out.
so
Wow.
yeah, it's crazy to hear about. And Kyle, I don't know if you heard Zach talking about how Atlanta and Savannah are both seeing that influx in
Yep.
OTRI. But what are your thoughts on that? And then I mentioned, the influx that's going to happen post the Suez blockage. What are your thoughts on how that's going to impact, I guess, the markets down here in the Southeast, which are apparently pretty hot, according to Zach?
He's right, and it's going to be a similar problem to what's in LA, just in a smaller version, and that's because we have shippers that don't want to wait or don't want to deal with this cluster, you know what, that's out in LA, and they're choosing alternative ports for it. We've seen Yeti is choosing to have their stuff docked in Houston. There are others that will choose Savannah, which then gets shipped over to Atlanta for its further distribution. It's the same problems that are going to happen. These goods are going to come from overseas. That's just the way America is set up. It's the way it works. We purchase goods made in another country. So when that stuff comes over, it has to come into port somewhere. Everything on the West Coast is a serious problem. So if we're going to move that through Panama, it's going to end up in Houston or in Savannah, maybe even all the way up in New York, New Jersey. No matter what, it's going to be the same type of problem. That stuff has to get from port to another point for further distribution. What we've seen on the West Coast will probably start to happen on the East Coast, and that's the level of demand from the U.S. consumer is so high. A lot of this freight doesn't have the time to sit on rails and go the intermodal route, and it's not even going through the chain so much. A lot of it goes long haul, which is kind of similar to the problem with the backhaul head haul market, like Stockton or any other warehousing market. If we have this freight going long haul, it's getting further and further away from where it needs to be, and it's going to take a lot of time, usually weeks, for that truck to work its way back to where it was, if it is Atlanta. So we're sending all these trucks to these markets that need them, but then we're sending them further away from the markets that need them. And it just exacerbates and compounds the snowball effect of the markets in most need of capacity never having them.
Yeah, Kyle, it's interesting. I think the takeaway here, the quote of the show is Stockton is the new Miami, or Stockton is the Miami of the California
Yeah.
with the backhaul market. But the point you're making there is interesting to watch is the effect that it's going to have on all the different modes of transportation, because you talk about intermodal and you talk about going over the road long haul on over the road on truckload and taking it to where it's supposed to go. When it comes through the West Coast, it's supposed to hit the rail and head to Chicago and Memphis and Dallas, right? It's supposed
Yep.
to hit the warehouses and be transloaded and held and then moved again, can go back on a rail or truckload over the road, right? These are the ways it's supposed to move. When it hits the East Coast, there's no warehouse
Right.
to do
It's
the
eliminate that
crossload.
straight to the problem already.
Right? I
Just
mean, as
dig
soon as
into
it
it.
gets off the boat, you've got an issue, right? Because I mean,
Now what are you going to do with
Houston,
it?
yeah, Houston
But
isn't
to your
set up to
point, even
be
with the
90%
intermodal
container,
stuff,
right?
yeah, it's not. And to your point, I had a conversation with a very large bottled water company. Here's a low margin business. They didn't have enough product on the East Coast that they were long hauling from LA all the way to the East Coast water. And when you're paying upwards of $10,000 of a load, that's not cost advantageous to your company. But they didn't have the time for any other alternative routes. Now, like what you're saying on the East Coast, we don't necessarily have that same intermodal infrastructure like you do out of LA. So we're just going to skip it. And instead of even thinking about it, it's just going to be that same problem. I got to get this on a truck. That truck's going to take it where it needs to go. And now we have even more of that problem of pushing the capacity away from the markets that need it most and driving it into an area, probably parts of the Midwest that don't need it as much, don't have that level of volume that these port cities have, which
So I
increases
guess
the price. And then we just further and further exacerbate that problem. I don't know where rates are going to go, if they're going to have a 10 handle soon or not.
my big question, Kyle, and I don't even know if you have the answer to this or have any semblance of an answer. How do we fix it? What fixes this problem? Is it the American consumer just stops buying and stops ordering needless stuff, and that way you let all the freight catch up out of the ports? Like how does this problem get resolved?
That would be one solution. I think that would probably be hard to achieve. That would be a sea change in the behavior of the U.S. consumer, which probably won't happen. It would take too long to get manufacturing back on shore to solve all that. The easiest fix is the one that's underway, but takes time. We just need some more of it. We need more trucks. We need more trailers. Uh, Businesses have been somewhat hesitant to invest in assets. I know we closed 2020 with historically high levels of orders for tractors and trailers. The problem is it takes a long time for that stuff to actually get delivered. I would think, given the level of demand we've seen now for 9+ months, it's long enough to tell some of these larger carriers to order more. I know there was some hesitancy. Not everybody was sure if this level of demand would persist as long as it had. But I think now this general consensus that we've had of this being an H1 problem, this is going to be a 2021 problem. For anybody that follows Jason Miller, he's done a lot of work digging into the inventory numbers to show just how low retail really is. This is not something that's going to be solved overnight, in a month, in a quarter, in a half. It's going to take at least the entire year to get inventories where businesses are comfortable having them. At that point, we just need more people moving this freight. I can tell you one thing that would help in all of this is just some better efficiency and optimization of what we currently have. And the easiest way to do that is to get rid of these routing guides that we're just ripping through. Why are we going to keep rates on file 50 cents below market value when we all know that thing's going spot? Let's move these contract rates up higher so that we don't have the worker productivity drop. Let's start to get ahead of this and get some of this business moving. Otherwise, we're just going to spend the entire 2021 chasing our tail and wondering why everything is costing so much.
You're getting way too logical, Kyle.
Yeah.
You
This is freight, right?
It's getting not get crazy. We are still in the freight business. I would think that one other thing that's really kind of that is pushing this as well is we're in that realm in housing, Kyle. It feels like
Yep.
with the rates down, so you got suppressed mortgage interest rates are suppressed, inventory is gone. It is a seller's market. I see it on my own street. People are starting to use their house as an ATM again, and it's a dangerous slope to go down, but it also fuels a ton of freight moving through the system as well, right? That's got to be putting pressure on it as too.
Completely agree, and we've only seen the beginning stages of that. Think about this: that most of the freight moving, the problem right now is in retail or in durable goods for consumers. Manufacturing hasn't come back like it was prior, or industrial freight. So if we get the house as an ATM thinking in America back, and everybody starts doing home improvements, or we see construction boom, or another push higher on the housing market, those aren't the same trailers, but they're still the same tractors. And if you can
Mhm.
get paid more in one area than you could in the other, you know where that tractor is going to end up. So it's going to be a competition for all products across whatever tractors we have. All of this pushes price higher.
Cool.
Kyle, where do people go if they want to hear more of your logic?
Easiest way, check out our website, k-ratio.com.
Awesome. Thank
Right
you
on.
so much. It was really, really insightful. And thanks for answering my big question.
Thank you for having me. I appreciate it.
Thanks, Kyle. The alacritous Kyle Lintner.
Always,
Very nice.
always a good interview. Always a good
Oh
interview.
yeah. Great insight. Great insight. We got to keep rolling along though, don't we, Kaylee?
Yep.
We've got John Gallagher, our Washington correspondent. We got a bunch of stuff going on. John, how are you, my friend? We finally got to you.
Yeah, no problem. No, I'm good. I'm good, you guys. How are you, Michael and Kaylee, doing?
Doing good.
We're
Good.
doing great, my friend. Hey, what's going on? Let's jump into the meat of it here, my friend. Our Washington correspondent, always good to talk to you. Washington, if people don't know, does these things that affect trucking and infrastructure and all this kind of. Who would have thought that this happens? But it's been a while since we talked and had you on. Let's talk about what is happening with infrastructure, my friend. Everybody's been
Yeah,
talking about this.
right. That's right. Last week in the House of Representatives and the House T&I committee, Pete Buttigieg, DOT secretary, came and this was geared to be an outline of the administration's plans on infrastructure. And it was interesting just watching that hearing, hearing all the congressmen talk about. They were so impressed with how he had a handle on pretty much every issue that they threw at him. It was almost as if they were trying to stump him. I think even one congressman mentioned that, and I mentioned that because they're Democrats and Republicans seem to be both impressed with this guy, and so he's likely that'll help. And he's trying to be this Pied Piper for transportation. So I think that'll help a lot in trying to get these infrastructure goals that the Biden administration has across the goal line. So, but I mean, at the hearing, he talked about a lot about what he's talked about before, what Biden has mentioned about, it's not just about building roads and bridges, but environmental equity and, pushing for electric vehicles and, 500,000 electric charging stations, equity for people like low income people to have access to transit, access to broadband. So they're trying to lump a lot of stuff together here, and it's shaping up to be another, multi-trillion-dollar legislation like the COVID bills were. So on the other side of the aisle, you've got the Republicans talking about, they're adamant to keep it. Let's just keep this and infrastructure. This is should be about roads and bridges, and no new Green Deal initiatives or anything like that. But the big question is always, how are we going to pay for everything? And he mentioned Buttigieg, he outlined a few of the options, the traditional options like user fees, like a vehicle miles traveled tax that the ATA has, pushed back against. They're in favor of getting a gas tax raised instead. User fees, raising taxes, borrowing money, which would add even more money to the national debt. And even something that's come up before on the private side investment is this, the idea of a infrastructure bank, which would leverage private funding with public funding to get even more bang for the buck. So, but I saw Buttigieg yesterday. He told CNN that raising the gas taxes would affect middle income Americans. So that's not the way to go. And also he pushed back against the VMT. So that leaves, at least as far as the Highway Trust Fund is concerned, doing more of this borrowing from the general fund to pay for highway infrastructure. So we may be getting, Biden's supposed to talk tomorrow. He's supposed to unveil his big infrastructure plan tomorrow. So when he unveils that, we might get a sense of maybe, where his priorities are in or at least a direction in how he sees paying for this. User fees versus borrowing versus raising taxes.
Let's just put it out there. I'd love to have you back on maybe Thursday. We can tear that apart. If you've got the time on Thursday, we can bring that in and tear that apart after Biden announces that and goes through that tomorrow. Well, did you see anything inside this? You're talking about EV and environmental impact and even broadband, right? So on. Is there information in here? AV is part of the infrastructure now as well, right? I disagree with what the Republicans are saying. It's just roads and bridges baloney. The infrastructure is way bigger than that now. They've got to get their mind out of the past and into the future of what infrastructure actually is. Was there talk about infrastructure for AV as well?
Yeah, there was. They tried to pin them down on automated vehicles and driverless technology, like he said. What he talked about there was, he mentioned like regulations that they haven't in the United States. The regulations over that stuff has not caught up with technology. So that's going to, and so he made it seem like that's what we got to do. We have to come up with regulations on this kind of thing and actually see policy roll out on it. And as you know, as I think we talked about last time, the whole AV issue, even in trucking, that's kind of a divided issue between the independent guys that see that as taking jobs away versus the bigger carriers seeing as it's the way it's the way of the future, and we've got the money to invest in it.
It's interesting. AV, I'd love to ask an industry leaders, and I was going to ask Kyle this question, Kaylee. I think this is a good question we need to put out there for when we have a industry leader out here. And I don't know what your thoughts are, John, but as far as AV, you're a trucking company. Where do you put your money? Do you put your money in trying to fight this losing battle of trying to recruit drivers and keep drivers? We always have this driver shortage. We always have the shortage of drivers. Or do you put your money in solving the issue through AV and hopefully you get a good hybrid mix in the future? Which one's the better bet in the near, short, and long term would be an interesting question to hear what executives have to say.
Yeah,
it would be.
So what's going on in the West Ports, my friend? The craziness of dispute with exports and imports. What's happening in that?
Well,
he said, she said, finger pointing.
Well, it's interesting too because this whole past week has been about the Suez Canal getting all this attention, holding up trade between Asia and Europe. But we still here in this country we've got our own supply chain disruption that's still going on. With these ships piled off of LA. I think I heard. Kyle, your last guest there, talking about, I think he mentioned like 25 ships that are either at anchor or waiting to get in. So we still got this issue here in the United States. And actually during the hearing this last week, Buttigieg was asked about it. He was asked, what could you do to intervene there between what has become this dispute between the container ship companies and the U.S. agricultural exporters, over transportation rates and container availability, and which has been an outgrowth of the surge in the container business worldwide. And he said he was going to. Buttigieg, again, to his credit, being on top of stuff. He mentioned that this has reached a new level of urgency, and that he was going to consult with the Federal Maritime Commission to address the problem. And I had a quote from him. He says, the more we can have a supply chain that is resilient to these kinds of things, like supply shock shortages, the stronger we'll be in weathering these temporary economic conditions. And he claimed that Biden has a priority for this too. As far as regulatory actions that can be taken, the carriers that are serving the West Coast ports have been shipping these empty containers back to Asia, or charging exorbitant prices for ag exports, just because of all this demand for the U.S. import on the import side. So And meanwhile, you've got the ag exporters. They're saying that their goods are they've got these perishable goods that are just going spoiling. So the question is it price? Are they these guys, these container ship companies, price gouging? Are they or is there an actual lack of actual service, there are actual violations? And the FMC said that they basically said that they have 10 vessel operators that they've demanded answers from. They're ordering a report on their practices on demurrage and detention and their container supply return policy, or their container return policies. So depending on the responses, the FMC said that they could take action on them, which could be, I guess, fines or other, some sort of service order that they can impose on these guys. So the FMC, the regulators seem to be looking at this pretty hard.
Yeah,
Wow.
and they need to be looking at this pretty hard. And it'll be interesting to see what comes of this and how they fix this. But they've got another excuse that just is unwinding itself in the Suez, do they not? Because now containers are going to be all out of place again, right? Now they have
Yeah. That's right. I mean, even though that's more of a Europe issue, you're right. So they've got it on both sides of of international trade.
Yeah, they're going to cut us a break, man. We just got out of the Suez Canal. We need some more time to get this fixed, and so on. Hey, John, always a pleasure. We run out of time so quickly. Hopefully Thursday, maybe we can get you back on if you got time. Let's talk about that and dissect what Biden has to say tomorrow. That'd be a great update, I think. Maybe
Sure.
get you on in the beginning of the show so we can spend some time with that. It'd be awesome. How do people reach out to you, and where do they pick up all your stuff? I know where to get it.
Yeah, just my email, jgallagher@freightwaves.com, and on Twitter at John A. Gallagher #1 is my Twitter handle.
Right on. A Washington correspondent. Check out all of
Awesome.
his stuff on freightwaves.com. It's excellent stuff. Thank you so much, John. Hopefully we get to talk to you again real soon, like in
Sounds good.
48
Thanks,
hours.
you guys.
Sweet.
I don't know about you, Michael. It feels like we're jam-packed in everywhere, and we are jam-packed with summit events. And let's run through those really quick because we've got 3 coming up in April, right?
Wow. Yeah, we absolutely do, don't we? We have the Enterprise Fleet Summit, which is it's next week.
Next Wednesday already. Yep.
Next Wednesday, April Summit, Enterprise Fleet Summit. Successful fleet managers are always looking for ways to grow the business, whether it's in their customer base, profit margins, industry network, or fleet size. Check it out next Wednesday. Going to be a lot of great information there. And then we've got what's coming up after that one there?
We've got Net Zero Carbon Summit. So we're all about going green, talking about sustainability in the future. And then we close out April with Drone Waves, which is pretty exciting. We're going to finish that up, and then it's right into FreightWaves Live at Home again. It feels like we just had that, and here we are again, back again. And then we've got Owner Operator Summit coming in the summer, cybersecurity, and then we keep talking about it. The granddaddy of them all, as you call it, F3 Future of Freight Festival in November.
The Coachella of Freight.
Coachella of Freight.
Which Dooner likes to point out I've never been to Coachella, but I can imagine what it's like, and this is going to be it.
I'm going to say the Bonner lineup for this year was just leaked. I just found that out. So maybe we'll get leaking our lineup here. I don't know.
I'm sure we'll get something. Hey, it's interesting because you said we got FreightWaves Live coming up, right? And it seems like we just did it.
Yeah.
That started this all.
It did. It was like the first virtual event that happened, wasn't it?
It was, and it rocked, and it changed the industry. And
now look at us.
Our visionary leader, and there's no doubt about it. Craig Fuller was telling everybody, hey, this is the wave of the future in some form or fashion, whether it's together or whatever. And you're going to see it at F3 when everybody comes back here to Chattanooga, how we blend all that technology and all that stuff together in the future freight. It's going to be tremendous. Cannot wait for it. Where do people go to catch all this stuff in their favorite podcasts there, Kaylee?
You know what? You go to freightwaves.com, and I've got to give you guys a little plug before the show ends. I'm starting a new show all about modern shipper. We're going to be talking about, you guessed it, shipping modernly. Check it out on Tuesday afternoons.
I accept your invitation alacritously.
Alacritously. We'll see you Thursday, guys. Thanks for tuning in with us. Another jam-packed show for you there. Have a good day, everybody.